Picture this. Sunday night. You need to send money to sister, emergency. She needs $500 now, hospital bills. You open Bank of America app, closed. Wells Fargo, closed. Chase, closed. Every bank closed until Monday 9 a.m. She needs money now, not in 7 hours. You try Venmo, $500 weekly limit. Already hit it. PayPal, same problem. Zelle, requires both people have accounts at participating banks. She doesn't. Western Union, open, but charges $40 fee. Takes 3 hours. Plus sister has to drive to location picking it up. She's in hospital, can't leave. You're stuck. Money in your account, can't access it, can't send it. Banks control everything. Their hours, their rules, their fees. Your money held hostage until they decide open for business. That's traditional finance. Today, we're breaking down how DeFi is destroying banks' monopoly on your money. Now let's get into it. DeFi and the future of finance. Quick note. This info comes from multiple sources. If something's wrong, drop a comment. We make economics so simple that anyone with zero knowledge can understand. DeFi stands for Decentralized Finance. Simple terms, financial system with no banks, no paperwork, no asking permission. Everything runs on code, smart contracts, blockchain. Instead of depositing money in bank, waiting for them to process, in DeFi, you click few times. Money automatically goes into protocol earning interest, lending to others, or swapping to different coin. Everything happens 24/7, no weekends off, no bank employees needed. To make this work, DeFi uses a tool called AMM, Automated Market Maker. Think of it as vending machine creating markets automatically. Instead of having buyers and sellers placing orders, AMM uses mathematical formula. Most popular is X times Y equals K. Imagine pool containing two types of tokens, ETH and USDC. When someone buys ETH in pool decreases, USDC increases. Formula automatically adjusts to maintain balance. Token price changes without needing market maker, like standing at vending machine. You insert dollar, press button for Coke. Machine dispenses next can automatically cost slightly more because fewer Cokes in machine. That's how AMM works. You can be person buying drink, meaning token, or person stocking machine, meaning liquidity provider. If you put in 10 Cokes and some cash, you earn profit every time someone buys. This mechanism completely changed how people trade crypto. Before, if you wanted buying selling coins, had to use centralized exchanges, Binance, Coinbase, create account, verify identity, deposit money, trust them holding your assets until FTX collapsed November 2022. Millions of people learned trust can evaporate overnight, lost everything, no warning, no recourse. Then DeFi appeared as rebellion. Don't trust anyone except code. You hold wallet, you hold private key, you decide your money. Only thing you trust? Smart contracts. Hope developer didn't code wrong, because that's DeFi's biggest weakness. We'll discuss later. DeFi isn't just a place to swap coins, it lets you borrow money like Avi, earn interest like Compound, trade futures like GMX or Hyperliquid. But regardless of form, most DeFi revolves around AMM, giant liquidity pools where users contribute assets creating markets. So, is DeFi actually big or just scam? Answer, getting pretty massive. According to Q1 2025, data total spot trading volume on DEXs, meaning decentralized exchanges, reached $876.3 billion, up 25% from previous quarter. Meanwhile, CEXs, meaning centralized exchanges like Binance and Coinbase, only reached $3.9 trillion, down 28%. This means nearly 1/4 of all global crypto trading happening on DEX. In other words, every 4 people trading crypto, 1 person already left Binance for Uniswap or PancakeSwap. DEX no longer small niche. Uniswap, the AMM king on Ethereum, just 1 week in October 2025, processed over $39.7 billion in trades. PancakeSwap version on Binance Chain reached 17.7 billion same period. Entire Q3 2025 PancakeSwap hit 749 billion, up 42% from previous quarter. Uniswap in August 2025 alone hit $118 billion. Of course, DEX isn't perfect. Biggest DeFi risk actually not technology, it's people. Every time market heats up, group of FOMO investors rush in not knowing what they're playing. Then concept called impermanent loss appears. Example, you contribute to ETH USDC liquidity pool. When depositing 1 ETH equals 1000 USDC, later price doubles to 2000 USDC. You think massive profit, right? Wrong. AMM automatically rebalances ratio, causing you to hold less. ETH more USDC when you withdraw. Total value lower than if you just held ETH from start. People call this impermanent loss because you only actually lose when withdrawing. Before that, just temporary loss. Second risk, getting hacked. In DeFi, world hackers aren't guys in hoodies typing in darkness. They're highly skilled programmers that can find vulnerabilities in smart contracts that even 3-layer audits miss. 2025 Bunny Dex attack caused $8.4 million disappearing in seconds via flash loan. Projects shut down immediately. Losing money hurts. Losing trust hurts more. Once hacked users leave, liquidity vanishes. Token value halves overnight. DeFi market moves so fast you sleep in 1 hour, might have nothing left to withdraw. Additionally, transaction fees are a classic joke. Sometimes you swap $10 token, but Ethereum gas fee costs $7. DeFi transaction like buying burrito, but having to pay extra for fork. That's why many people switching to Binance Smart Chain or Solana. Fees cheaper, speed faster, though liquidity bit less. But this creates different consequence. DeFi becomes fragmented land. User money scattered across the dozens of chains. Creates new problem. Fragmented liquidity. Each chain, each DEX, each pool has separate liquidity. Want buying token? Sometimes must open 3-4 different exchanges finding good price. Example, Uniswap on Ethereum and PancakeSwap on Binance Chain. Both AMMs but have different rules tokens and farming mechanisms. One wrong click? Toast? Legally? DeFi basically has no concept of this. Once hacked or scammed, game over. You can tweet asking community help, but unless community sympathizes and organizes rescue, nobody responsible. That's dark side of freedom. Freedom means when problems happen, nobody cares about you. Anyway, everything has disadvantages, but can't deny DeFi opening massive potential. Looking at history, every DeFi cycle goes through familiar loop, explosion, recession, then rises again. From era of just lending and farming, 2021 exploded with AMM and NFTs, then appeared aggregators and cross-chain bridges. Now entering 2025, DeFi entering new chapter, becoming real financial infrastructure, not just token speculation casino anymore. Center of this wave, stablecoins. Foundation layer helping traditional world and blockchain talk to each other. Stablecoin is token with fixed price. Usually one token equals $1. Impact very large. USDT, USDC, DAI are blood flowing through DeFi's body. They're digital dollars running 24/7, transfer money cross-border fast as sending text message costs cheaper than coffee. According to data, through September 2025, total stablecoin market cap reached $300 billion. Up 75% from previous year. Experts predict by 2028, number could exceed $2 trillion. As stablecoins penetrate, payments, e-commerce remittances, even global wages. More impressive, stablecoin transaction volume now surpasses both Visa and PayPal. According to A16Z, year 2025, total transaction value through stablecoins reached $46 trillion, 3 times Visa. Even after removing fake transactions, still $9 trillion, 5 times PayPal. In other words, people using stablecoins more than Visa and PayPal combined. When money flows, giants can't sit still. Stripe paid $1.1 billion acquiring Bridge to turn stablecoins into digital payment backbone. Visa and MasterCard testing networks accepting USDC. PayPal launched PUSD. Own stablecoin backed by real USD assets. Best part? Stablecoins not just for rich people. In high inflation countries like Argentina, Nigeria, Turkey, stablecoins are lifelines. According to Milken Institute in Nigeria, over 40% crypto transactions involve stablecoins. People use them preserving value, receiving remittances, cross-border payments. For them, stablecoins aren't just technology, they're survival. DeFi hasn't stopped there. New Wave brings decentralized futures, on-chain version of futures that traders know well. On centralized exchanges like Binance or Coinbase, all data controlled by an exchange can even manipulate prices. You only see numbers they want you seeing. Example, October 10th, recently crypto market nosedived. Many coins dropped 60-70%. Accounts liquidated en masse. Binance announced only 2 billion liquidated, but on-chain data showed possibly 20 billion. In DeFi, everything public on blockchain. Nobody can hide. September 2025. Perpetual DEX trading volume hit 143 trillion USD monthly, double previous month, average daily, over 38 billion poured into decentralized futures. Aster project, once backed by CZ, hit 10.6 billion volume one day, surpassing Hyperliquid taking throne. Thing making traders crazy? CEX leverage limited 10x 20x, but perpetual DEX 100x or more. But remember, 100x means fast profit, but also fast liquidation. This only half the picture. Other half and most fun part, prediction markets. Simply put, place where people bet on future, but not with bookies, right on blockchain. You can bet who wins US election, Bitcoin price, end of year, whether Elon Musk tweets about Dogecoin, two biggest names, Polymarket and Kalshi. Polymarket is decentralized on-chain. Anyone can view public data. Kalshi licensed by SEC, plays off-chain, complies with US law, both creating New Wave, BetFi, betting plus DeFi. Just September 2025, Polymarket and Kalshi reached 1.4 billion USD transactions. 2024 election season hit 8 billion. Bloomberg reported Polymarket valued 12 to 15 billion. Kalshi exceeded 10 billion after recent funding round. Finally, puzzle piece, bringing DeFi closest to traditional finance, tokenized stocks, or simply stocks on blockchain. Now, you don't need US account buying Tesla or Apple, just crypto wallet. You can buy 0.01 Amazon shares, trade 24/7, even use as collateral on DeFi. Robinhood partnering with Arbitrum Optimism and Solana making this happen. This more than tokenizing assets, it's democratizing access to global finance. Bottom line, DeFi gradually becoming central puzzle piece of new economy. Led by America, where White House quietly calculating turning this technology into tool boosting dollar. Someday you might use USDT buying US bonds. Use those bonds as collateral borrowing USDC. Continue using USDC buying tokenized stocks. Very abstract loop led by America. Winners? Those who understand and dare go first. Of course, DeFi is still not paradise, still hacks, still code bugs, still scams everywhere. So, equip yourself with knowledge experience. Learn to walk slowly but surely. Because in this world, knowing how to surf waves isn't enough. Must be careful not getting swept away by waves. What do you think about DeFi? Ready to leave traditional banks behind? Or staying safe with Bank of America? Don't forget to subscribe so you don't miss any videos.